Hi, everyone. Let's talk a little bit more in detail about the upcoming CPI report. And then we have lots of long-term charts to go over. And then we'll talk my thesis and positions going into Monday. And of course, finally, we have to say go Birds. Hope they get another Super Bowl win. The last one was awesome. Second one in my lifetime would be awesome. So yeah, go Birds, beat Kansas City. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at the inflation report, we've talked about this a lot, so I'm not going to hit everything in detail. I just wanted to highlight some of the interesting points that I noticed here. This is the Morningstar article, and I do want to highlight they are saying a 0.5 increase. I believe what I saw before was a 0.4 increase. And then for core, we're expecting 0.3%. They also highlight 0.5% versus 0.1%. That might be a typo. I believe it was minus 0.1% last time. And they said 0.4% for December. So slightly different numbers than what we talked about on the Market Watch estimates. So marginal differences, but the headline numbers here, the year-over-year numbers are the same. So that's good to see. Moving down here, they highlight services versus goods. So we've seen goods deflation pretty substantially. You can see we were inflating very strongly in the middle of 2021. And we've actually been in a deflationary period where prices are declining. And this is a 3-month annualized change. So you can see we're moving down here. Services may be ticking down slightly, but you can see we ticked down before, we went higher, and now we're ticking down again. Are we going to make a lower low here? Is this kind of a wave trend? Is this something that we need to watch? Definitely interesting, something I'll look for on the CPI report itself. But services still going higher in terms of prices. Goods finally starting to go lower here. And they don't mention it in this article, but something else that I've seen is that now that interest costs are going down, we've seen car note interest go down, mortgage note interest go down. That's actually starting to prop up the cost of used cars, new cars, and homes, which is interesting. We haven't seen a rate cut yet, but they did overshoot the headline rate a little bit because they assumed that the Fed was going to continue to go higher until they didn't. And so, like I said, we did see those rates come down a little bit, and that is energizing the cost of those goods that are heavily dependent on interest rates. And to finish up here on this article, they highlight that the Fed is talking about 2 25 basis point hikes in March and May. I know we've talked about this before, but in terms of percent chance, the May meeting is still highlighting a potential pause as the most likely case. So 25 basis points in March, and then a pause in May, potentially, as long as the CPI report does not come in crazy. If CPI is extremely hot, then 25 basis points in May is probably going to happen. And going over to the Fed rate percent chance tracker here, you can see still a 90% chance that we see a 25 basis point hike in March. So still expecting that to happen. Very low probability that we do 50 basis points. So no percent chance right now that we're going to get a pause. We talked about that before being a possibility. It did have a percentage before, but you can see now we're actually drifting towards the chance of a 50 basis point hike. That would be pretty interesting. And moving down to the May cycle now, the percent chance of a 25 basis point hike has actually moved up pretty dramatically here. So still factoring in a move to that 475 to 5, and now almost a 3/4 chance that we get another 25 basis points in May. But there is still a small percent chance, about 20% now, that we do see a pause in May, assuming that we get the 25 basis points at the next hike, which is interesting, right? So you can see here previously it was closer to 40%, and before that it was actually a higher percentage. So definitely keep an eye on this. I do like to look at this percent tracker. Anytime that a move is favored immediately before the Fed announcement, it's been 100% correct. So anything over 51% the day prior to announcement is what we end up getting. And so far, they have not deviated from that. Moving over to the charts, starting off with the SPX on the 1-week view, you can see we did get to that upper trend line. This is a very powerful trend line. We've talked about how this shorter term trend was developing, but this is actually a much longer term trend line. We talked about this last Sunday's video. That's why I think the Sunday videos are very interesting. It gives you that longer term perspective on where we are relative to previous markets. And this is a powerful trend line. We definitely got rejection last week and then this week. Did overshoot it by quite a bit just to take out these previous highs here and generate some liquidity, in my opinion. Noticing on the MACD, we did get a step down, just a very, very small step down in terms of percentage here on the weekly momentum. If this is going to crater similar to the August dip, you would want to see a more significant step down next week. We also have this shorter term trend line here sitting down at around 39.75. Certainly could find some support in there. Definitely interesting though. If we do break that level, then you're looking to come back down into this previous trend all the way down at 37.65 or so. Maybe we hit it a little bit later at 37.85. Somewhere in that zone. Of course, there's going to be some support in this previous level of demand going back to about 38.15, 3800, somewhere in that zone. So a couple of levels to the downside, definite things to watch here. But right now we're in a rejection, it looks like. Might get another wick to the upside with the CPI report, and then you would expect this to fall. But like I said, maybe we come in, find some support here, and move to new highs. That would be interesting. That would be a pretty big move if we did get that. But if we do break this next support, then you have a couple of levels a little bit further down to look for. Moving over to the NASDAQ, still on the 1 week view here, I do want to highlight this blue trend line. It's not the same as these very sequential longer term trend lines, but you can see it goes back here to the 2008 crisis, marks a lot of tops and bottoms, very significant levels, and that is where we came into and interacted with. So it's not the standard levels that I have on the charts. You can see multiple pretty evenly spaced levels. So this is something to watch, definitely interesting. Possible level of support does not look the same as the SPY where we are at a clear rejection. Also worth noting here that the MACD on the weekly here on the NASDAQ did not step down. It continues to look a little bit stronger. And we'll talk about the ratio later here, but definitely looks a little bit stronger in the short term. Still looks like rejection though. And we're looking to see whether this trend line is going to break or not. So on the shorter time frames, we talked about this trend potentially not being broken. But on the weekly view here on the actual indices, it does look like we found some support. And this could certainly go up or retest these highs once again. If we do a third rejection, then at that point you would expect it to come through that support level. So definitely interesting. Definitely would make sense if we got a lighter CPI number that could give us that final liquidity push and then the rejection. So keep an eye on that. Certainly possible we bounce from here, get another wick up, and then the rejection. But if we take out these previous highs, you do have to entertain that possibility. Then you would be looking to come up to around 13,500 or so, pretty much in line with that August high. And remember, we do have this gap left back here from that August move down, which you could certainly view as a level of resistance as well. Moving over to the Russell, similar thesis. You can see that longer term resistance going back many, many years here. Touched that level, got rejection. We do have a shorter term trend line in here that we've been talking about. Does look like a little bit of a channel, maybe a midline on this overall channel. But right now we're potentially at a support level. It's definitely interesting. I wouldn't expect this medium term to hold. If we're going to continue this trend, you would want it to be back down at this lower level, maybe around 1835, 1825, back in this zone where we come down, test a more major level of support, and then get the continuation. It's worth noting that we got a more significant step down here on the Russell, so that's interesting. In terms of momentum, still above the SMA here on our side, but overall does seem to be weakening. That initial step that we saw here in August where we had
fairly similar with that inside candle,
looks very similar here,
and move
gap
lower.
through and move down, getting that initial step. If we do get a gap through and move down, that's going to be a bearish week and that we're going to move lower. But of course, markets don't usually do the same thing, but it does look. Moving over to the Dow here just for a moment, you can see on the weekly view, the Dow has had multiple steps down. Momentum is very weak here on the Dow. We've been flat for quite a while. We're not making new highs like the other charts. And just like we talked about on the shorter time frames, this actually supports a possible move higher. Take out this trend line one more time, throw some wicks to the upside, take out some stops, generate that liquidity, and then get the more significant move back down to longer term support. That would be down at around 31,600. 31,650 back in that zone. Obviously, there would be some support along this trend. It's been holding up for quite a while. So once we see that break to the downside, there's not a ton of support until we get back to that longer term trend. So interesting here. The Dow does not look the same. Definitely looks weak though. Like I said, expect one more liquidity push probably during CPI, and then we get that longer term rejection back down to previous support. which would be a nice little move to the downside if you could catch it, about 10% or so from top to bottom if we do get that and take out the trend line one more time. Moving over to the NASDAQ divided by the SPY on the weekly chart. Not a lot to say here except for the fact that we are at a key level. We're looking at rejection here from this upper trend line. The trend line here has not broken the way that the overall trend on markets has. So you can see we're still in this downward trend. Looks very clear rejection, marking previous tops and bottoms. And if the NASDAQ is no longer going to be leading to the upside, you would expect overall markets to move down as well. It's worth noting that this 3 level is fairly important. That was the previous low in May and June. And we also had interactions on the up move in April of 2020. But you can see that this was just a really significant up move during COVID, and we're just kind of renormalizing the level here now. We also got rejection from the 55 EMA on the weekly view. We're well below the 200 and 144s. All the EMAs are in order here, again, indicating that this is still a consistent downtrend. You could certainly see a situation where this continues to hold a little bit. You get an overshoot of the 9 and the 21 where you get a cross. And then once you get that cross back to the downside, then it's going to be significant movement to the downside, in my opinion. But otherwise, it looks like we're going to be in a period for the next few weeks of NASDAQ underperformance and the SPY starting to take the lead at least a little bit. Moving over to SPY divided by gold. We talked about this previous bottom where we got rejection and then got a significant move back up to resistance here. At this point, you would expect gold to start to outperform and the SPY to move down. Clear level here marked, found the rejection. Now we're at another clear level. Going back to this previous rally, marked multiple bottoms, broke through that trend, we're retesting the trend, and now it looks like we're going to get rejection. Obviously, keep an eye on this, could go higher, but at this point, it does look like we're going to reject and move lower overall for a SPY versus gold, indicating that gold will outperform the SPY, at least in the short term. Moving over to SPX divided by the M2 money supply to finish up the ratios here with my favorite. I don't know if I caught this last time here, but you can see on the previous week's candle, you can see we actually filled that gap going back to August. So that's interesting. We did not fill the gap on the actual SPX chart, but on this chart, we did fill that gap. We're now getting rejection from that level. You can see we're currently trapped between these two major levels. Found rejection multiple times. Like I said before, we could get a little bit of a bounce, throw another wick, and then I would expect this to move down pretty significantly. There are some other levels of support in this zone. I would expect at least a little bit of a bounce from here. We have the major trend line coming from the highs, marking the previous highs here. That's probably going to be a strong level of support in my opinion. I don't think this shorter term trend is going to hold. If we do come back into this zone, I would expect to retest that trend and then get the bounce. If we're going to get a bounce, even a short term bounce is possible from there. But then, like I said, if we do get rejection back at the December high, then we come through and maybe sideways chop in here. Certainly a possibility. But if we do take out this previous low, it's probably going to be a pretty powerful move, similar to what we had here coming off that August high. Strong move through there, two very big candles. And if we do get a break of that level here, then you would expect to be coming into that October low. And like I said, I expect that to be powerful. If we do come in and we're kind of chopping around in here, seems less likely that we're going to get that bigger move down. And we could be caught in a range here going sideways until we see a significant change in the macro environment. Of course, CPI could be that big change. Maybe we see CPI come in quite a bit higher than expectations, and we start to see the market sell off and push through these levels. Obviously, possibility if over the next few months. We obviously have a couple of Fed meetings coming up, which could be big catalysts. But just to reiterate, I expect short-term bounce, probably a push back into this level of support, and then a bigger bounce back into this level, and then we have to see what happens here. If we're going to go higher from here, a bigger push through the previous highs, or if we're going to get rejection and a push back to the previous lows. Either way, definitely need to be watching these levels on this specific chart. Moving over to the put-call ratio on the weekly view, you can see we've not been in a high level for quite a while. You can see a lot of calls in the market. But on this most recent candle, we had a wick to the downside, very low wick down to that 0.5 level. Lots of calls being sucked into the market at that point. Now we're starting to see this trend up here, indicating that we're potentially going to be moving down, in my opinion. And I've mentioned this before, but the put-call ratio is good at marking extremes. And then when you start to get this trend between extremes, it seems to be fairly accurate here. So definitely interesting to see a huge wick to the downside, sucking in lots of calls, and you would expect this to continue moving higher as the market moves lower until we get into this upper extreme. At that point, you would be looking for probably an exit, in my opinion. Moving over to stocks above their 50 and 200-day moving averages on the weekly view. It's worth noting that the weekly view did get an inside day, looks like a reversal candle. But overall, this trend is still intact. Let's jump this down to the one-day view just so you can see that trend a little bit better. You can see this trend is still strong, bouncing off of the 21 EMA, getting a little bit of a rally. Like I said before, this could certainly go higher, at least a day or two, maybe fill this gap going back to February 2nd, get a gap fill, and then get the continuation down. That's what I would guess. I do think there needs to be a little bit more liquidity pulled into the market. And if you're looking at this as a chart, you would expect a double top, take out this midline, and then get a more significant move down, in my opinion. So that's what I'm looking for on this chart. Looking at the 50-day here, similar thesis with a high, a midpoint, and a lower high here. Now we're looking to see if we're going to take out this midpoint, or if we're going to just kind of chop sideways here and get a little bit more sideways action in the markets instead of these pretty consistent trends that we've been seeing. Moving over to the dollar on the weekly chart to give a little bit longer term perspective, you can see this point where we bounced into resistance was a very strong support level. Multiple highs interacted with here, which ended up being very strong levels of resistance so far. And you can see we hit that level on the way up. So we came up, came into that level and found very strong support, made a significantly higher high from that level. And now we're in this kind of midline, right? So we found some support. We're in an area where you could see rejection coming through. And we did here a little bit at that level. Now the question is here, do we reject from this level, come back in, maybe hit 102.30, 102.25? Maybe even all the way down. I don't think that's going to happen, but it certainly could. You come in, find a little bit of support, maybe make a higher low here, and then we get that bigger push up to this next trend line through these levels. This trend line was fairly important on the way up here. We did stop at that level, find some support, found rejection, and then moved down. So that's interesting. It's worth noting that momentum here on the MACD also is moving to the upside quite a bit on the weekly view. So if we do find rejection in the short term, like I've been talking about, the dollar moves down, finds a higher low, maybe just throws a wick to the downside, and then we get the continuation on CPI. Certainly possible. Looking at RSI here, you can see we did get through the SMA, indicating that this is probably going to hit the 50 line at least. And then if we do get rejection from the 50 line, that's something to watch for. But right now, we're through the SMA, looking for the 50 on RSI. Possible higher low continuation or straight up rejection, certainly possible as well. I don't think that's going to happen, but could happen. And then at that point, you would be looking for lower lows all the way down to like 100 or 99.50, maybe even 98.50. That would be a pretty significant move. And that would definitely send markets higher. Always keep that in the back of your mind. Anything is possible. But right now, it seems likely that the dollar is going to be moving higher over the medium term. Moving over to TLT just for a moment on the weekly chart, I do want to highlight this 102.50 level, very significant level, marked a bottom here in November of 2013, where we had a significant move higher, multiple interactions in 2009 and 2010. Did get breaks through that level, but really chopped around it and interacted with it quite a lot. You can see a candle break and very strong push through that level in 2011. So indicating this is a fairly strong level based on what I can see here, but noting that we are coming back into that level here now where you could see a potential bounce, see yields go down just a little bit, and then get the continuation. This does look like a double top here at this point. This could certainly go lower. It's worth noting on the RSI, you can see we came into that 50 level very close on the previous rally, and then we touched it here again, and we're getting rejection. We're not through the SMA quite yet on the RSI, so there's certainly potential for a bounce higher, which does correlate with a short-term bounce from this level, get a lower high potentially, and then get the push back down to the previous low. Certainly possible. Something to watch for going into the next week. If we do see TLT going lower and yields going higher, that's obviously going to be bad for stocks. So keep an eye on this, but that's what the longer-term charts are showing me here. Moving over to the VIX on the weekly chart, you can see here we did get rejection at this previous level, really close to the trend lines that we're watching. You would expect probably a wick here, maybe even a gap lower, find some support, and then a move higher. And that fits with my thesis of a move higher on Monday. The question is what happens after that. So if we do get a move higher Monday, gap down, something like that, find some support in this zone, then we're coming into major resistance. This is a longer term trend line here on the weekly chart. We do throw a wick through here, maybe get rejection, find a higher low potentially, and then we start seeing that bigger push up to these previous levels. That would put you in the 27.90, 28 level. To me, that means we're getting back down to the October lows if we're getting back into this zone. And then if we're starting to test these previous highs here, you have to expect that we're making new lows, pushing into that 35 to 40 level. And if we get anywhere above that, obviously the market is starting to crater pretty dramatically. I don't think that's all going to happen in the next week, but it certainly could. Anything can happen in the markets, but right now my thesis is a short-term down move, push back up to this resistance. Maybe we get a pause at this level and a gap through, and then the continuation, kind of like we had here where we got rejection, came up, paused, got a gap through, and then the continuation. Something like that is certainly a possibility, something that I would be watching for. But right now, that's my thesis. Moving over to my accounts, you can see I do have a little bit of a long position going into Monday. I am short-term bullish. I have a couple of puts here expiring on Monday. I will not hold any positions going into Tuesday. And here on IWM in my IRA account, I do have a short put spread, limiting my risk to the downside, risking about $4 here to make one. I do expect that we're going to get a short-term bounce on Monday. I think that's going to happen. I think that'll accelerate into the CPI data, like I said before, generate some liquidity to the downside, find that ultimate rejection, and then we start to move down later in the week and make some new lows. At least in my opinion, that's what I'm looking for. It is worth noting that after hours on Friday, even after my video, the NASDAQ did move up almost to 300s. IWM stayed basically the same, maybe a few cents higher at the close. But the Q's going a little bit higher. Does seem like we're going to get a short-term bounce into Monday, but I will be flat going into the Tuesday announcement. One more time, go Birds. Let me know down in the comments section who you think is going to win the Super Bowl. Or if there's any charts that you want me to go over, definitely put those down there as well. Definitely like and subscribe if you got any value out of this video. And make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading. Go Birds and have a great day.